Zimbabwe has more than doubled interest rates to 200% in an effort to tame inflation and also outlined plans to make the U.S. dollar legal tender in the southern African nation for the next 5 years. Soaring inflation has been piling pressure on a population already struggling with shortages and has cast a shadow over President Emerson Mnangagwa's bid to revitalize an economy that suffered decades of decline and bouts of financial chaos under the leadership of former President Robert Mugabe. At one time, Zimbabwe's inflation rate, which is now around 191% for June, was estimated at 79.6 billion percent month on month and 89.76 stillion percent year on year in mid-November 2008. The country has struggled to address hyperinflation, which began in February 2007. Ali Kansachu is still with me, and we're going to go into this very quickly. The news announced this morning that the interest rate is going to 200%. We were expecting something, but we were not expecting 200. So we have inflation, which has hit 190 for June. What has this rising inflation done at this point in time to the purchasing power of Zimbabweans?
It's decimated the purchasing power of Zimbabweans. If you look at what a salary can buy you today, versus what it could buy you 12 months ago, it really is terrible. It's shocking. And I think it's that's reached this tipping point. Zimbabwe has experimented with all kinds of all kinds of monetary policy responses, all of them unorthodox, none of which have worked since the very time that you described. And I think this is the first time we're seeing a classic, appropriate, correct monetary policy response to the problem. I think, we'll have to see some discipline out of the government, that they don't keep printing money. And if they can do that in tandem with this interest rate response, then I think they could stabilize the currency. But really, it's been a terrible journey for the average Zimbabwean.
The interest rates, which was already the highest, was around 80% before it was announced this morning that it would be 200%. And as you said, this is something that you find to be the right and appropriate response. But it's been tried before without much success in similar ways. You also talked about the experimenting, the unorthodox approaches that they've done. So why try it again? What's the impact that you expect that this 200% interest rates will now have on the economy?
Well, look, for the first time that I can recall in a long time, they're taking the interest rate above the rate of inflation, which is the normal response, the classic monetary policy response to inflation. There are other parts of the world where people are not doing that, the United Kingdom, Europe, and the US, where they're far behind the curve. But essentially, for a smaller country the size of Zimbabwe, what happens is if you don't respond in this appropriate manner, you end up in a Turkey situation or a Zimbabwe situation, one of hyperinflation and Weimar economics, where you've got to wheel around a wheelbarrow to buy a loaf of bread. So I think, there are other elements in the response, but this, I think, is going to be fierce and violent enough to shake people and get a better classical response within the currency. Of course, the big issue here is government discipline when it comes to money printing. We all know what's been going on. They've been printing money like crazy. A lot of people who've contracted with the government have then been seeking to convert this money before it lost all its value as fast as possible into hard currency, and that's created the selling pressure on the Zimbabwean dollar. So there are other elements that they've got to bring into play. But I think what we've reached now is this is the last chance saloon. This is the appropriate response. Of course, there are other issues swirling around food security. But, Zimbabwe was once the breadbasket of that part of the world. It should not be a problem for them. But I think, look, they've done the right thing finally. And I'm hoping that it's going to work out for them.
So we also know that part of it, as you said, there are a number of basket options that they're putting together. And now we're hearing that the U.S. dollar will be legal tender for the next 5 years. Zimbabwe has tried this, whether unofficially or officially. They've tried the RTGS dollar. They've tried a number of things. We're back here with the U.S. dollar once again. How do you think this is going to work, Ali Khan?
Well, the RTGS dollar wasn't really the US dollar. It was a Zimbabwean version of the US dollar. So I think I think this again is probably the right thing to do because it gives people some optionality. I saw, for example, that civil servants are requesting that some element of their compensation is in US dollars. So the problem here is the Zimbabwean currency has lost all credibility. And therefore, in order to make it more credible, they can't just, they're trying to keep the dollar in there to give it some security as well, and then put interest rates in the right place, which should stabilize the currency. So I think, if I'm looking at it, I think they're making a serious attempt to stabilize the situation. But it's going to require calibration going forward, and it's going to require discipline, something that's been lacking under the Mnangagwa government.
All right, so we can't have this conversation if we don't talk about sanctions, because the issue of sanctions are the things that have mainly made it so difficult, and Zimbabwe has tried a number of things. Have the sanctions against Zimbabwe not overgrown or outgrown their usefulness at this point in time?
Well, look, sanctions are a very blunt instrument, and they tend to work better against smaller countries like Zimbabwe. They're not working against Russia. In fact, it's a boomerang situation, and it's hurting Western economies more. I think, Zimbabwe is also trying now to reconcile with the Commonwealth, for example. They're reapplying to be taken back into that. I think, it behoves them now at a high level to go back and negotiate their way out of sanctions. And I think until they do that, they will still remain on the back foot. It's very difficult to it's very difficult to navigate a sanctioned economy if you are the size of Zimbabwe or Venezuela. It's very, very tricky. So yes, I think sanctions have made it much harder for Zimbabwe, and I think they really need to think geopolitically and start engaging with those sorts of folks in order to get some kind of sanctions relief now.
All right, so very quickly as we wrap things up, it's a market-driven economy. We've seen that the Reserve Bank has cut economic growth forecasts from 5.5% to 3.5%, and the bank is saying they're going to be aggressive with this, and that's what you're asking for. You even said violence in terms of discipline and the issue of printing money. But does Zimbabwe have any more options after this? If this does not work, what are we looking at?
Oh, that's a tough question. Look, I think on balance, if I was to score this is a correct response, and it should work. But other things have got to happen at the same time: discipline, money printing discipline, and also some sanctions relief. If it doesn't work, then I think the slide will be very precipitous and asymmetric, unfortunately. But I think on balance, I think they can make it work. I think they've got to also reach out to the AFDB, the likes of the IMF and World Bank, and tell them, what do we need to make this work? And I think those sorts of entities will be supportive. But at this point in time, there is no option to go it alone. They've made the right moves. They should be rewarded for the moves they're making, and they should see some kind of relief and further policy reforms, of course.
All right, Ali Kansachu, thank you. I can finally say goodbye to you today now. Thank you so much. And it's a very big developing story from Zimbabwe. The highest interest rates in the world before at 80%. This morning, we heard, of course, it is now up to 200%, a reaction to what is inflation that has been yet again running away from the country. It's one we'll be following very closely. We do know that right now there has been an emergency meeting of some of the economic managers and players called in Zimbabwe. So as soon as we have the details, you will also have them first. Up next is Crypto Watch. And now it's time for Crypto Watch as we start wrapping things up on Business Edge. We know it's been a very tumultuous past few weeks for the cryptocurrency markets, and we've been watching very closely. Bitcoin helping with the rally, but now it seems Ether might also be helping with that rally back in the crypto market. Joining me, I have Obinna Iwuno. He's the founder of the Crypto Bootcamp community, and we're quickly going to look at issues with this in Crypto Watch. Obinna, welcome to Business Edge. Thank you so much for joining me.
Yeah, thank you for having me.
So it looks like cryptocurrency investors and holders would be breathing a bit of a sigh of relief. People can breathe a little bit better in the past few days with both Bitcoin and Ether now stabilizing. So what's changed from where we had the big dips and shakeups to this current time now?
Well, not much has changed. What you see is just the normal market sentiment. It's a market that it has to go up and come down, and you know, macroeconomics is a major factor that has affected crypto most recently. But then, like no system ever stays the same for a very long time. So if you have been watching for a downtrend, the upside is that within a very short period of time, you are going to experience an uptrend. And when you look at that, there is an exhaustion point, for market makers, because you cannot continue being a bull and you cannot continue being a bear. Like we would always say, the bulls are the bears and the bears are the bull. All right. So this is all about market sentiments, market plays, and of course the vested interest. But we know that one of the major triggers of what has happened in the industry within the past months is, of course, market macroeconomics at play. How the federal interest rates on tax has affected the crypto market, not just the crypto market, but also the stock market. And there is also an indication that this might even trickle down to the real estate market, the housing market, right? So, but now you look at the crypto market, most of what has taken major blows are the altcoins, right? And the altcoins are largely dependent on Bitcoin for their rally. And so when Bitcoin we normally say this, that when Bitcoin sneezes, your altcoins catches cold, So you see a situation where if Bitcoin goes down 20%, you find altcoins bleeding like over 80%, 70%, 60%, as the case may be. All right. But in the rally of these altcoins, one coin has always stood out, and that is Ether. All right. One of the reasons why Ether has stood out in this altcoin rallies is the fact that Ether was the first altcoin to introduce new innovations to the crypto industry. All right. If you look at Bitcoin today, Bitcoin is still a technology that can only send and receive. There is nothing much you can do with Bitcoin apart from sending and receiving. But then you find Ether that has redefined the way things is done. You can categorically say that Ether is a software. All right. So it allows you to come build your own solutions on their network.
Okay.
So despite how much the crypto market will go down, because Ether is offering a utility that is beyond the crypto industry, there would be always a sort of investment going in the direction of Ether. And that is why you find that most crypto OGs would rather keep their money in Bitcoin and Ether than in other altcoins.
All right.
All right.
So Obinna, let me come in here, because you did mention how external shocks, external factors are affecting the cryptocurrency market, which is of course looking at the market situation around the world, the inflation and interest rate hike from the U.S. Fed Reserve. But it's also projecting another 75 basis points interest rate hike that is likely coming in July. So if that does happen, what does the crypto industry expect to happen then?
Well, people need to understand cryptocurrency beyond price, beyond buying and selling, really. So what you are going to see happen if this kind of implementation goes on? Of course, it will shake the crypto market, because right now there are, we heard of crypto companies who are downsizing, they are retrenching staff and but you are also hearing of some others who are hiring more. All right. So one company is retrenching, another company is hiring more. Now, it's going to be a shock in the crypto market because you cannot separate crypto from fiat. You can't separate crypto from the traditional currency. All right. The crypto industry is still largely dollarized. So that also puts in error the statements that most not properly enlighten people about crypto in the financial industry think that crypto is coming to replace the traditional fiat. No, it's not replacing the traditional fiat. If not, the interest rate hike wouldn't have had any effect in the crypto market.
Okay,
so it's going to have an effect, but what you would see is a rise in innovation.
Okay,
All
so
right? There's
on
going to
that
be
note,
more and more innovation. Yeah.
On that note, let me ask you, because you've talked about those who think that the crypto is coming to replace the traditional way of doing things. Now, Peter Brandt, a widely respected trader, said that last week Ether is likely to punch to as low as $300, saying that I would not buy Ether with my enemy's money. Do many people in the crypto industry feel the same way, or is this a misplaced sentiment? Very quickly, because we need to wrap up.
Not many people in the crypto industry feel the same way. In every industry, you would always have hardcore believers. There are a group of people we call Bitcoin maximalists. They don't even believe that Ether is a cryptocurrency or any other currency apart from Bitcoin. You see, so in each industry, you have people with such beliefs that if it is not this, it is not that. So this is a personal sentiment from this person, all right, that dollar is their enemy's money, okay? But I don't think that dollar is my enemy's money, all right? So like I just said, look at the innovative side of crypto, okay? So if they feel that way, it's not a general sentiment, really. In fact, you cannot separate cryptocurrency from the traditional fiat. I have said this over and over again. There is no how the crypto is going to stand on its own without the support of the traditional fiat. So both industry work hand in hand and they need each other.
All right. So very finally and lastly, very quickly as well, we've seen the market capitalization touching about 1 trillion. Do you think that we'll see more confidence in the system in the coming weeks, even though what has happened in the past few weeks has also shaken some people's confidence in crypto? Are we going to see some of that confidence being restored? Very quickly.
I mean, this is the third bear market since crypto history. In 2013, Bitcoin fell from $1,000 to about $200. In 2018, it fell from $20,000 to $3,000. Now it fell from $69,000 to about $17,000. What do you spot here? A pattern of an upward increase each time it rebounds, which means that you seeing Bitcoin at 17,000 today, at 19,000, at 20,000 today is a discount. All right. I have friends who are buying more and more Bitcoin all the way down because for them, this is the best time, or this may be the last time they will get Bitcoin so cheap. All right. So there is not going to be fear. Of course, paper hands will be shaking off the market, but the diamond hands are going to keep holding. And there are people who, despite all of this, haven't sold a single Bitcoin, despite all of this fear and sentiment in the market. Yes, they are still holding.
Okay, we'll leave it at that for now, Obinna. We know that we'll be touching base and to see if things actually do play out and this rebound we're seeing continues. Obinna, thank you so much for joining me. You are, of course, watching Business Edge. We're in the last final minutes of the show, but before we wrap things up, NC4 to Watch is coming up right now. And before we leave you for today, let's take a quick look at the stories we are tracking right here on Business. Despite some ongoing protests that began last week following a collapse in salary negotiations, South Africa's power utility said that the majority of its employees are still at work, even if generation capacity has not yet increased. The anti-graft agency has raided the homes of 6 top managers of Kenya Power and carted away documents amid an intensified war on corruption at the power utility. The Ethics and Anti-Corruption Commission said that residents belong to those in the supply chain, finance, and other departments of the power company. The Minister of Trade and Industry, Naveen Game, says that the industrial sector contributes 11.7% to Egypt's GDP, and employs about 28.2% of the total Egyptian workforce. Investments amounted to 49 billion Egyptian pounds in financial year 2020 and 2021, representing about 6% of total public investments. And finally, oil rose for a third session as threats to global output risk tightening the market further before OPEC Plus meets this week to discuss supply. WTI futures for August delivery advanced to $111.36 a barrel earlier this morning. Brent for August settlement stood at $116.91 a barrel. And that's the show. Don't forget to follow us on social media. Download our mobile app, and of course watch us on the platforms we are available. Don't forget that 11 a.m. West African time right here on News Central, we put African business, the economy and financial stories front and center. I'm Tolu Lokpe Adelaru Balogun. Do have a good day.